Hello guys, I hope you are doing good. On 29th of September, Mazagon Dock Shipbuilders Limited IPO is going to hit the market. In this video, we are going to cover about everything about the IPO, right from the issue details, issue size, about the company, business and the industry, growth potential, the financial performance, that is revenue, profit, key metrics or key ratios from valuation perspective, major competitors, the risk that the company is being exposed to, and we are also going to cover the grey market premium for this company. At the end, we are also going to end the session with a discussion whether one should apply or subscribe or avoid this IPO. So stay tuned, watch this video till end to have a complete view about the company. So let's start. Issue period. It starts from 29th of September and closes on 1st of October. The price band is kept at 135 to 145 rupees per share. Lot size is of 103 shares per lot. Issue size is from 413 crores to 444 crores. Some important dates. The issue opens on 29th of September, closes on 1st of October. Finalization of basis of allotment would happen on 7th of October. Initiation of refund would be happening on 8th of October. Credit of shares to demat account would be happening on 9th of October, and tentatively the listing date is kept at 12th of October 2020. About the company, it is a defense sector PSU which is handled by Ministry of Defense. So the promoter is President of India. It is one of the India's leading shipyard with a capacity of 40,000 deadweight ton. 40,000 deadweight tonnage means the company can build a ship which is having the capacity to store 40,000 ton of stuff. So it includes everything. It can be a person, means the passenger, or it can be some goods. So everything would be covered in that. It is engaged in construction and repairs of warships and submarines. It is the only shipyard to have built destroyers and conventional submarines for the Indian Navy. It has till now built around 795 vessels, including 25 warships and 3 submarines. Funds and use. The total issue size of 413 to 444 crores with an equity shares of 3 crore 5,99,017. This would be the whole offer. The whole issue is a offer for sale, that is OFS, where the funds would be going to the selling investors. And since the current investor is only the President of India, so it is just a divestment of the investment that is being made by the government. So total dilution of ownership is of 15.17%. So, and essentially they are also going to get some listing benefits. Now the financial performance. Revenue is increasing year-on-year basis, which is a very good sign. Right from 2017, it was 3,519 crores. It went to 4,978 crores in 2020. EBITDA has also increased from EBITDA has decreased from 882 crores to 826 crores. PAT, that is profit after tax, has decreased from 598 crores to 477 crores, which is a key concern, because given that revenues are increasing, still EBITDA and profit are decreasing, which raise a concern that profit margin are decreasing year-on-year basis, which is a key concern for the investors. Key metrics. Currently, return on equity is at 17.5% on an average basis from financial year 17 to 20. Price to book value is at 95 times, which is very good considering the industry PB is at 1.52. Price to earning ratio, that is P ratio, is at 6.8 times, which is very good, very attractive considering the industry P is at 9 times. So given the fact that revenues are decreasing, still they are valuing this company at a lower compared to the industry metrics. So it's a good sign and makes this undervalued and attractive bet. Major competitor is the Cochin Shipyard, which is having a land area of 170 acres and against the land area of 75 acres by the Mazagon Dock Limited. Shipbuilding capacity is 110,000, that is 110,000 deadweight tonnage against the 40,000 of this company. It builds large vessels for Indian Navy and Merchant Navy. Risk. Capacity is the key bottleneck for this company, so it may end up that some of the tenders or some of the contracts would be lost because of this. It is times and overcost runs. Given the fact that it's a government company, there might be the delay in executing the work, delivering the products. which would render, increase in time and increase in cost, which would decrease the profitability, which we have already observed in the revenues. No guarantee for future orders from Government of India. As recently the competitive bidding has started, so all the tenders would be given through that, bidding. So it may happen that in future company might lose some of the business from Government of India. Declining profit and margin is also a big concern area, which we already discussed in the financial performance slide. High dependency on defense sector. Most, I would not even most, but almost, the whole revenue is coming from defense sector. So if there are any policies, any regulation changes which would affect the business, then it would get a direct hit to this company. Payment realization, since it's the whole revenues are, each and every penny is coming from defense sector, Government of India, it would in turn be dependent on the budget of that, the defense budget of that year. So sometimes there would be delay in payment coming through, which would increase the working capital and would create a little bit of uncomfortableness, I would say, financial uncomfortableness for the company. Conclusion: it's a dominant player in building warships. There are high entry barriers in this industry, so it's not an easy task to start a company and get an entry in this business. It has a healthy land bank of 75 acres in Mumbai, so the land bank value would be much higher. Beneficiary of Make in India campaign, as we are right now promoting Make in India, it's a big beneficiary for this company. It has a strong order book and a debt-free company, which is very good for the company, and is undervalued in terms of valuation when we consider the industry average. So overall, looking into the each and every data, it looks really good. At the same time, currently the grey market premium is at around 122 rupees per share. So that's very lucrative given the issue price is 135 and the grey market premium is 122. So it makes the issue very, very attractive. So in my opinion, at the end, I would say I'm planning to subscribe this IPO. It looks very good, and I hope that I would there would be a good chance for a good amount of listing gains. Anyways, I guess that's it for this video, guys. As I am planning to subscribe this video, I would request you to subscribe my channel. And I would like to end the video with a disclaimer that don't just rely on my own research. Do your own research. Get the red herring prospectus downloaded from the website. It's available for free. You can read it through, and it would give you an amazing insight into the company. If you still have some concerns or questions, you can always consult your financial advisor before taking any investment decision. So I guess that's it for this video, guys. Thank you so much for watching this. If you like this type of content, please give a thumbs up. If you have some questions, suggestions, you can mention in the comments below, and I will respond them as soon as possible. And share this video with your friends and subscribe my channel. Thank you, guys. Thanks for your time. Bye.